Some good news, some good traction we are now getting out of the hard work we're putting on managing our asset portfolio. It's one area that we've always talked about, said that we will focus to bring that number down to at least 5 within a couple of years. We in Q2 we've seen a decline from the high of 9.8 in Q1, and we're closing at 8.4. The business, the bank is generating income as the year progresses, we also managed to get the IFC facility, Tier 2 facility, classified and signed off by the regulator as a Tier 2 facility, and that's contributed to the 2.7% increase in capital. So as at the end of first half, we've closed total capital adequacy at 17.2, which gives us a good buffer. You can see that the bank continues to really work hard in terms of maintaining expenses. General inflation across our region is close to about 6%, but when you look at the total growth on our expenses, is actually a decline of about 1%. So effectively, we are saying that our expenses are being managed downwards, and that leads to a 16% growth on profit before tax. Our effective tax rate has also gone down, comparing the two periods. I think in 2018 we are closing at below 30, and in 2017 our effective tax rate was above 30. So that has generated additional income. So our profit after tax position closing at 18%.
Generally, you see that the environment we operate in today is much stronger than it was a year ago. So whether it's on microeconomic aspects, the growth of the GDP for the economy, different sectors are coming up. So our loan growth is grown because we are contributing towards the growth of the economy. We've seen strong performance of our international businesses this year, which are 25% up to the same time last year. We've also been able to see recoveries of some of our loans that were in distress in the last year. Last year was very difficult, and obviously prudent cost management across our businesses. So overall, all elements of our businesses look strong and in line to deliver the performance we had expected. The digital transactions, which is largely mobile, or our merchant transactions, or even our agency transactions, we are seeing that growing up this year by 8 to 10%. Yeah, so we are today investing in a new payment platform, which should be coming in stream in this quarter by end of September. And my view is that because nearly 85 to 87% of our transactions are happening on mobile, we see huge opportunity either on lending or on mobile payments today, even savings on the same platforms. And I do not think that it's new. It's about being able to catch up and improve the customer experience through investments. If you ask me, is there one greatest segment affected by the rate cap? Is the micro, small and medium enterprises. And because we have been unable to price that risk, naturally, few customers are now getting credit. And while we are pushing as hard, most of our customers are asking us that we have no problem paying the price as long as we have access to financial services or we have access to credit. Let me say I'm positive that the issues have been raised, the analytic information is provided, the finance bill as a model proposal, isn't it? You see the minister has proposed an amendment or a repeal of section 33 and 34, and that's what we are proposing ourselves to be able to deal with the second half.